Hello students, welcome back. So we are going to begin another problem in joint venture account where the co-ventures maintain a separate set of books. So today we are going to solve another problem on joint venture. So X and Y undertake jointly to construct a building for a newly started joint stock company for a contract price of rupees 1 lakh. So the total value of the joint venture is 1 lakh. So we can call this as in a simple way sales. That means the total contract value on termination of the joint venture, we can get a revenue generation of 1 lakh. But this 1 lakh is payable 80,000 in cash and 20,000 in fully paid shares. So therefore, the total capital or the total sales we can call, not capital, the total sales or the total contract value at the time of termination of the contract is 1 lakh. So 80,000 in cash and 20,000 in fully paid shares of the company. So therefore students, 80,000 will come in joint venture account and joint bank account. 20,000 is called shares, joint venture account and shares account. However, we are not going to prepare the shares account. Your joint bank account was opened by X paying 25,000 and Y 15,000. So 25,000 and 15,000 is called the joint. It's called the capital contributed by X and Y. So the capital of 25,000 and 15,000 will be contributed and be taken in co-venture account and joint bank account. They share PL in the ratio of 2:1 respectively. It's called 2/3 and then 1/3. So 2/3, 1/3 is called the profit sharing ratio. Their transactions were as follows. Paid wages 30,000 and bought material 70,000. So wages and materials are expenses to be recorded in joint venture account and joint bank account. Wages is an expense, material is an expense. Material supplied by X 5,000 will come in joint venture account and co-venture account. And material supplied by Y. So Y have also supplied the material. It's called purchase from X and purchase from Y. So this 4,000 will come in joint venture account and co-venture account. Architect fees paid by X 2,000. Expenses paid by X 2,000 will come in joint venture account and co-venture account. The contract was completed and the price, both cash and shares, were duly received. That means 1 lakh is a total contract value that is treated as simply called sales. The joint venture was closed by X taking up all the shares of the company at a valuation of 16,000. So X took shares of rupees 16,000. So 16,000 will be recorded in joint venture account. Sorry, it will be recorded in co-venture account and shares account. I repeat, 16,000 shares taken by X will be recorded in co-venture account and shares account. However, we are not preparing the shares account. However, the total value of the share on the top, if you look at it, it's 20,000. 20,000 shares are being taken at 20,000 shares are being taken by X at 16,000. So you get a loss of 4,000. So that loss will be recorded in joint venture account. And Y taking the stock of material at an agreed valuation of 3,000. So Y took over material at 3,000. So 3,000 Y took over material will come in joint venture account and co-venture account. So credit side we write by joint bank account. It's 1 lakh. 1 lakh is divided into 2. 80,000 cash plus 20,000 shares. So total sale value of the contract, the total value of the contract is 1 lakh divided into 2. 80,000 cash, 20,000 shares. And then by Y account, Y took over materials for rupees 3,000. Debit side we write 2 joint bank account, 2 expenses paid for wages and material purchase. We get 1 lakh. It's an expense, and X supplied material, Y supplied material, and X paid architect fees as expense 2,000. And there is a loss of shares 4,000. Value of the share is 20,000 taken over by X, but not at 20,000 but at 16,000. So you get 4,000 loss recorded in debit side. And then we get a net loss of 12,000. 12,000 net loss to be distributed in the ratio of 2:1. Co-venture account. By joint bank account, capital contributed by X and Y. Next we write by joint venture account, material supplied by X, material supplied by Y. Next by joint venture account, architect fees 2,000 paid by X. Debit side, to joint venture account 3,000 material taken over by Y. 2 shares in X column, shares taken over by X. And then 12,000 net loss to be distributed to X and Y, 8,000, 4,000 in the ratio of 2:1. And then final settlement to X and Y will be 8,000 and 12,000. Joint bank account, receipt side, to joint venture sale. The total sale value, contract value is 1 lakh. Out of 1 lakh, shares are taken by X and remaining 80,000 cash is received. So debit side, to joint venture 80,000 sale of contract. Then co-venture contributed capital 25,000 and 15,000. And payment side, by joint venture expenses paid for wages and materials. And then co-ventures final settlement X and Y 8,000 and 12,000. So the total of the bank account will be 1,20,000. Thank you.